All right, a lot of talk about potential tariffs here in the U.S. after what the president said on Friday about raising tariffs on Chinese imports by 100% from their current levels. But this week, the EU also raised their tariffs on steel imports, a move seen as to basically block China from dumping steel on your continent. Talk to me about the EU-China relationship and where it stands right now.
First of all, indeed, if you look at the steel market already for many years is facing a global overcapacity. And this global overcapacity primarily stemming from China. So indeed, as the EU, we're looking how we can protect our steel market better and came with new solutions, new restrictions in a sense on importing steel in the EU market. But it has to be said that it's not a measure specifically targeting one country, but it's a horizontal measure covering all importers and allowing the EU steel sector to continue to work.
All right. It's fair that you say it's not targeting one country, even though China may be more impacted. I think even you can agree on that. But what about the U.S.? Is this a way to deepen your ties with the U.S. and maybe create a situation where trade can be a bit friendlier between the EU and the U.S.?
Well, if we talk specifically on steel, indeed, we are also engaging with U.S. because U.S. is also sharing the same concerns about global steel overcapacity and how to protect the local markets. So clearly there is engagement. And as regards EU-US trade relations, well, first it's worth noting that EU-US trade relations are the largest in the world, and we are each other largest trading partner. So there is lots of stake also economically, and correspondingly from the EU side, we are committed to work on faithful implementation of EU-US joint statement as regards trade.
All right. Just as recently as September, you were quoted as saying that growth is slightly above expectations for this year. You also expect it to be above previous expectations for 2026. How important is the U.S. and China normalizing their relationships for growth in Europe?
That's certainly an important factor because one of the factors negatively affecting growth is global trade uncertainty and global trade tensions, which we are currently experiencing. And EU's economic model is that we are open to the world. We are engaging with trade internationally. So for us, it's in our best interest to have a functioning multilateral rules-based trading system. And that's what we are committed to defend from the EU side. And in parallel, we are working to develop our network of trade agreements. So over the last year, we have concluded trade agreements with Mercosur, Mexico, Switzerland, most recently Indonesia, and we are continuing to negotiate with India, Thailand, United Arab Emirates, amongst others. So we see that we also need to diversify our trade engagement and trade flows.
All right. In the EU, we've seen some political uncertainty in recent weeks, specifically in France. You're there for the IMF meetings, there to talk about a number of issues, including reparation loans for Ukraine. When we're looking at the continent of Europe, what do you think American investors should be paying attention to? What are the issues that you think are critical for investors here?
Well, we believe we have lots to offer for investors with our single market of 450 million consumers and 26 million companies, with our predictability, respect for the rule of law, strong institutions. And we are actually seeing elevated interest from investors in euro-denominated assets. Because in these turbulent times, also stability and predictability counts for something. At the same time, it's also clear, and that's one of the overarching priorities now during this political cycle in European Union, is to strengthen the competitiveness of our economy, to enhance productivity growth, because, well, yes, we also have some catching up to do.